Hey guys, welcome back to the channel. In this video, we'll be doing a stock analysis on one of my largest holdings, AMD. We'll be looking at the business itself to see if AMD is a high quality business, and we'll also be doing a valuation a little later in the video to see if AMD is currently trading at an attractive price. If you enjoyed the video, please consider hitting that like button and subscribing to the channel. Alright, let's get into it. So AMD is a semiconductor company based in the US, and they design computer chips, starting at entry-level desktops all the way up to supercomputers and data centers. AMD's business can essentially be broken up into two easy categories: desktop and data center. For those who don't know, data centers are large rooms dedicated to house massive computer systems. You know those rooms filled with those big black boxes that you see at Google or Facebook's headquarters? Those are data centers. So on the left hand side we have Ryzen, which are their CPU chips for desktops and laptops. And then you have Radeon, which are their GPU chips for gaming. The PC behind me has both a Ryzen CPU and a Radeon GPU. And then on the right hand side we have EPYC, their data center CPU, and Instinct, their data center GPU. It's a pretty good business to be in terms of competitors. For CPUs on both sides, they only have one competitor in Intel. And then for GPUs, they only compete with Nvidia. So they have kind of a duopoly going on. And it's good because it's also a business that has a pretty large barrier to entry. In terms of business model, I think AMD is more like Nvidia than Intel. Both AMD and Nvidia source their base chips from Taiwan Semiconductors. And then they take the base chip and they put all of their designs and architecture on top of it to turn the base chip into a CPU or GPU. Whereas Intel design and manufacture their own base chips themselves. This is really important and it gives AMD a big advantage for a few reasons. One, they don't have to focus on the extremely complicated process of making base chips. Instead, they can focus all their energy on the process of taking the base chip and then putting their architecture on top of it to turn it into a high-performance computer chip. This is good for AMD because Intel are forced to spread themselves pretty thin by doing both complicated processes themselves. And the consequence is AMD have overtaken Intel in computing performance. And Taiwan Semiconductors have also overtaken Intel when it comes to designing the best base chips. And two, designing and manufacturing base chips is extremely capital intensive. For example, last year Intel had $29 billion in operating cash flow, but they also had $20 billion in capex. And you can see they keep having to spend more year on year to keep improving the process. Whereas if you look at AMD, they had $3.5 billion in operating cash flow, but only $300 million in capex. So you can see AMD has a really capital-light business model compared to Intel. And outsourcing their base chips from Taiwan Semiconductors has worked out well for both parties, and it's allowed them both to specialize in their own fields and become industry leaders. Next, we want to see if AMD is a high-quality compounder, and we judge this by looking at the return on capital employed, the return on incremental capital employed, and the reinvestment rate. If you missed it, I made a full video where I explain all of this in detail and how to use this spreadsheet, so check that out if you missed it. I'll put a link to the video in the description, and I'll also link this spreadsheet if you want to use it for your own analysis. So for AMD, I have two spreadsheets for two different time periods. I said in the other video I usually have a 5-year model and a 10-year model. But for some businesses I like to do a 1 and 2 year model as well to see the results in the short term. So the results in this checklist are pretty incredible for AMD. In the 10-year model, the reinvestment rate is 200%, and the return on incremental capital employed is a massive 50% over 10 years. And if we multiply the reinvestment rate by the return on incremental capital employed, we get the intrinsic value compounding rate, which is 98% a year. So over the last decade, AMD have compounded their intrinsic value by 100% a year. In the 5-year, it's pretty much the same story. 200% reinvestment rate, 40% return on incremental capital, and they had a value compounding rate of 78% a year over 5 years. So the 5 and 10 year results are amazing. So now let's look at the 1 and 2 year models. In the 2-year, they have a 145% reinvestment rate, a 50% return on incremental capital, and a value compounding rate of 73%. And finally, in the 1-year, from 2020 to 2021, AMD's reinvestment rate was 77%, and the return on incremental capital was 98%. So just in the last year, AMD have compounded their intrinsic value by 76%, which is pretty incredible. And last but not least, their total return on capital employed is 29%, compared to just 7% for Intel and 18% for Nvidia. These results are absolutely incredible, and AMD is definitely a compounder. But the question is, can AMD keep compounding capital at these insane rates of return? And that's the critical question to answer. I think there's a lot of growth drivers for AMD going into the future, with the biggest one being the data center. Over the last 10 years, Intel have completely dominated the data center, And in 2018, they achieved over 95% market share in server CPU sales, compared to just 3% for AMD. But AMD's innovation and advancement over the last 5 years has led to their new third generation of data center CPUs, codenamed Milan, beating all of Intel's data center chips across the board, in some cases more than doubling Intel's performance. And this big performance advantage has led to AMD growing their data center market share six-fold to over 18%. It'll be interesting to see if AMD can pull ahead even further when they release their new generation of data center chips, codenamed Genoa, in 2022. I think over the next few years they'll keep taking more market share from Intel in every segment. Alright, if we look at the financials, AMD are going through a massive growth burst at the moment. In 2021, they increased their revenue by 68% year on year to over $16 billion. And they also had 230% growth in operating cash flow and 300% growth in free cash flow. If we look at the individual segments, for computing and graphics, which is basically just Ryzen and Radeon sales for desktops and laptops, their revenue grew by 45% to $9.3 billion. And their operating income for that segment was up 65% to $2 billion. In enterprise embedded and semi-custom, which is their data center EPYC and Instinct sales, as well as the sales from GPUs sold to Microsoft and Sony for the latest Xbox and PlayStations. Their revenue for that segment grew 113% to $7.1 billion since last year, and their operating income or profit grew nearly 406% to nearly $2 billion. So really strong growth in that segment. And if we look at their overall profit down the bottom, their operating income more than doubled in the year to $3.6 billion, up 166% year on year. I think this recent performance shows AMD have huge demand at the moment, and their insanely profitable business model is starting to hit that critical mass. Now it's just whether Dr. Lisa Su and the rest of the management team can keep progressing as they have been and keep the advantage over Intel, especially in the data center side. Cloud providers like AWS, Microsoft Azure and Google Cloud all require the most efficient and best performing CPUs for their data centers. So whoever makes the best CPUs will probably win the majority of the market over time. And AMD currently has the advantage. And right now they already provide data center solutions to all the leading cloud providers, like the three I mentioned before, Alibaba, Tencent, Meta, and Twitter. As for the GPU side, right now Nvidia is the market leader in both the desktop and data center segments. But AMD is slowly bridging the gap over time, and they were actually the first to make a 7nm data center CPU a few years ago. While I do admit Nvidia has the performance advantage right now, I think AMD's recent acquisition of chipmaker Xilinx, which specializes in data center solutions, will help a lot in challenging Nvidia in high performance computing, AI, and cloud GPUs. Early testing of their new MI200 Instinct GPU shows it outperforms Nvidia's A100 in multiple AI and HPC workloads, in some cases by a huge margin. So overall, in both the CPU and the GPU segments, I think there's a huge runway for growth for AMD, especially with the rise of new technologies like machine learning, AI, and cloud computing, where the runway is just beginning. We already know AMD is a compounder, so as long as they continuously have reinvestment opportunities, they'll continue compounding capital at high rates of return. Alright, so we've established that AMD is a high quality business that has a long runway to grow and compound capital. So now it's time to do a valuation and try to estimate AMD's intrinsic value to see how much we should pay for the stock. And to do this, we're going to use a discounted cash flow model. Because we're a few months into the year, I'm going to estimate their free cash flow for 2022. So for the free cash flow, I've used $5 billion. With the Xilinx acquisition, I think it'll probably be more than $5 billion, but I'll use that just to be conservative. For my growth rates, I've used 20% for the first 5 years and 15% for the following 5. This sounds high, but if you think about how they have been growing their free cash flow by over 300%, 20% might be a little low, but I'd rather underestimate than overestimate. For the discount rate, I've used 10%. And for the terminal multiple, I've assumed that based on AMD's high growth and high return on capital, I've assigned it a terminal multiple of 25. If you look at Nvidia and Intel's free cash flow multiple over the last few years, I'd say 25 is pretty fair considering how much better AMD's business model and return on capital is compared to Intel. And with their 1.6 billion shares outstanding, this gives us an intrinsic value of around $196 a share. So that's my estimate of AMD's intrinsic value. Now obviously I could be really wrong about the growth rates or the multiple, so please don't just take my word for it and please do your own research. I know I won't be exactly right, but even if I'm in the ballpark with my estimates, it makes AMD shares pretty discounted to their fair value today. And based on how attractive the business is, I think the risk to reward is really favourable. So that's my analysis for AMD and my estimate of their intrinsic value. If you've enjoyed the video so far and you want to support the channel, I'd really appreciate if you hit that like button. And if you want to see more videos like this one or join our growing little community, then hit that subscribe button. And if you're still bored, I'll put another video up in the corner that I think you'll find interesting. If you've watched the video all the way to the end, thank you so much for watching. And as always, this video is not financial advice. Please always do your own research before making any investment decisions. So that's it for today. Thank you so much for watching, and I'll see you guys in the next one.